Bitcoin is finally showing some signs of life with a much needed bounce. But the question is this an actual trend reversal or just a classic relief rally before we see more downside? Now, by the time that you're watching this on Friday, prices may have moved a bit from the time of shooting, so pay close attention to whether the levels that we mentioned have held. If you feel like the market has been heavy, you're not crazy. We've had 5 straight months of red candles since the all-time high of 126K last October, which, by the way, landed in Q4 just like it had in previous cycle tops. In past bear markets, we hardly had more than 2 to 3 consecutive months of red at a time. So while this bounce feels great, we have to stay objective. History is screaming at us right now. So aside from the length of the past cycles being within days of each other, we're also seeing other familiar patterns play out. In previous midterm years, we've seen local lows in February, followed by a sucker's rally in March before the downtrend resumes. What's more, the last cycle, about where we are now, we had the Russia-Ukraine war. This time it's the US and Iran. Whether it's a coincidence or that we're living in a simulation, I don't know. But of course, history does not always have to repeat itself. So here are some key levels to watch in order to get clues to where the market might be heading. As of today, Bitcoin is hovering around the $75,000 mark. Now, this is an important resistance zone since it previously acted as a major support level. So if by the time that you're watching this and we've just gotten rejected below 70K again, odds are the resumption of the downtrend is already in motion, as that is a textbook bearish signal. If, however, we've managed to hold above or hold support above 70K, the next level to watch may be the bear market resistance band, which currently sits around the 82K level. So getting rejected from here is also another signal that the downtrend is continuing. Now, we could wick as high as 88,000, even 90, and as long as we don't close weekly candles above it, the macro bearish structure remains perfectly intact. For this to be invalidated and flip bullish, we need to see Bitcoin break above the 90K level, hold it as support, and show strength. Until then, the objective view is that this is a relief rally in a larger downtrend. And look, we can't ignore the world around us. We are 3 weeks into a war between the US and Iran. Oil is spiking. The Strait of Hormuz is a mess, and the S&P 500 is struggling to push past the 7K mark and looks itself to be in a topping process. If it rolls over, it's unlikely Bitcoin will be able to decouple and fly on its own. And don't forget, as we are recording this, the Fed is actually in the middle of their March meeting. By the time that you're watching this on Friday, we'll already have the interest rate decision and Powell's latest press conference in the books.
Today, the FOMC decided to leave our policy rate unchanged.
Most people were expecting them to hold steady, but with the Iran war spiking oil prices, the big question is whether they've turned hawkish again to fight that new wave of inflation. If Powell sounded aggressive, that's one reason why price might have stalled, since the higher for longer narrative is basically the ultimate buzzkill for a Bitcoin rally. While often narrative follows price, it's a fact that elevated oil prices for a sustained time will strain the global economy. And risky assets don't usually perform well in uncertain times and when liquidity is tight. So watch the key levels, stay objective, and don't let some green candles talk you out of your plan. I'll see you in the next update.